Hello learners, in the previous video we discussed about the format of cash flow statement. Let us recollect it. As you know that total cash flow statement is divided into three parts. The first part is cash from operating activity, the second part cash from investing activity, and the third one cash from financing activity. Let us see what is there under cash from operating activity. As per the format, first we have to write the profit. If the profit is increased from the previous year, see for example, in 2020 the profit was 50,000. 2021 the profit is increased to 1 lakh. So you have to write 50,000 minus 1 lakh. So what is the difference? Difference is 50,000. So that we have to write first. So for this particular profit, we have to add certain things and we have to deduct certain things. The first thing, we have to add any non-cash item. Okay, for example, goodwill written off, depreciation, all bad debts written off, such kind of written offs or any non-cash items we have to add back. The second thing we have to add, that is decreasing current asset as well as increasing current liability. Any current asset value if it is decreased, so we have to add back to the profit, or any current liability value if it is increased, that also we have to add back. Hope you are clear with the things what we have to add back. Next, we have to see the item which we have to deduct. The first thing we have to deduct, that is increase in current asset. See, decreasing current asset, what we did? We added. The opposite of that, increasing current asset, we have to deduct, as well as decreasing current liability, we have to deduct. Okay, if you do this, you will get the cash from operating activity. Okay, this is a basic of cash flow statement. So let us see the problem related to cash flow statement. Okay, here I am having one problem and the other side I am given the solution. Okay, right. So first we will see what they asked us to calculate. So they told us to calculate from the following information, calculate cash from operating activities. Okay, they are given 2 years. One is 2013, another one is 2014. 2013 is a previous year, 2014 is a current year. Okay, what we have to do, whatever item is given, say for example, profit and loss account, debtors, bills receivable, general reserve, wages outstanding, salary prepaid, goodwill. These are the items given. So what you have to do is, we have to compare with the 2013 as well as with the 2014, whether it is increased or decreased, that we have to see. The next part we have to see whether it is a current asset or current liability. Okay, because you know that decreasing current assets as well as increasing current liability we have to add, and increasing current asset as well as decreasing current liability we have to deduct. And also if any non-cash item is there like goodwill, general reserve, depreciation, all those things we have to add back. Okay, let us get into the question. What is the first thing is given? You can see here the first thing it is given, profit and loss account. In 2013 it was 60,000 and in 2014 it is 65,000. What happened with the profit? The profit is increased. Okay, you can see here profit is increased. How much it is increased? It is 5,000. So as per our format, the first item is profit during the year. Okay, how to calculate? We have to compare the previous year profit with the current year profit. Next thing we have to add. Okay, in add we have 3 items. The first item is non-cash items. Okay, the second one decreasing current asset, the third one increasing current liability. Okay, the first one we will see debtors. What happened with the value of debtors? You can see in 2013 it was 85,000 and 2014 it is 48,000. So the value of current asset, that is debtor, is decreased. So what is our rule? as per the rule, if the current asset is decreased, we have to add back. That's why you can see in the solution part, you can see decrease in debtors, that is current asset, 85,000 minus 48,000, which means it is 37,000. 37,000 is decreased. That's why we are adding back. Okay. Comes to the bills receivable. First tell me, bills receivable is a current asset or current liability? It is a current asset. So what happened with the value? It was 40,000. Now it is 81,000, means the value of current asset, that is bills receivable, is increased by 41,000. So what is the rule? The rule is if the current asset is increased, then we have to deduct. That is the reason you can see in the solution, increase in bills receivable, I deducted. The amount is 41,000. Next, we will go for the general reserves. Okay. So, what happened with the value of general reserve? It was 1,72,000. Now it is 2,07,000, which means 35,000 additional amount is transferred to general reserve. As I already told you that anything connected with the general reserve, any value is increased means we have to add. Okay. So, what happened? 35,000 you can see in the solution. Under add, I added, transfer to general reserve, it is 35,000. Okay, right. Hope you are clear with these many points. Next, we will go for the wages outstanding. First, tell me, wages outstanding is a current asset or current liability? Yes, it is a current liability. Correct? No? So, what happened with the value? It was 26,000. Now, it is 8,000. The value of wages is decreased by 18,000. Correct? No, it is decreased by 18,000. Which means what? What is our rule? If the current liability is decreasing, then we have to deduct. You can see under less, it is there. The next one, salary prepaid. Okay? Salary prepaid is a current asset. Correct. So the current asset, what happened with the value? It was 8,000. Now it is 10,000. Means it is increased by 2,000. So if the current asset increases, then we have to deduct. Correct? No? Yes. That's why we deducted that item. And the last one is the goodwill. So what was the value of goodwill in previous year? It was 70,000 and now it is 60,000. Correct? No? So value of goodwill is decreased. So it is nothing but it is called as a goodwill written off. In the beginning of the video only I told you, if the goodwill written off is there, then it is a non-cash item. So that is the reason we have to add back. I think all the items on the debit side we are covered right now. So you can see the solution. First we written the profit, that is 5,000, and we added 3 items. The first item is transfer to general reserve, that is 35,000. Goodwill written off, that is 10,000. Then decrease in debtors, okay, that is 37,000. Together if you see, you will be getting 87,000. Means your added profit, that is 5,000. If you add that, you will be getting 87,000. Then comes to the deduction. The first item is increase in bills receivable. We have 41,000. Increase in salary prepaid. We have 2,000. As well as decreasing wages outstanding. We have 18,000. Together it is 61,000. So from 7,000, if you deduct 61,000, we will be getting 26,000. That is the cash from operating activities. Okay. Hope you clear with the first problem. Let us go to the second problem. Okay. The same way, the second problem also we have to work out. Okay. What is the first item as per the format? We have to write the profit. Okay. You can see in the last line, first year there was no profit. Second year 70,000 is a profit. Nothing but it was 0 first, then it is increased to 70,000, means the current year profit is 70,000. So I written 70,000. Now we will see one by one item. What is the first item? You can see here the first item is a bills receivable. Bills receivable is a current asset, correct? So we will see what happened with the value. It was 50,000. Now it is 47,000, which means the bills receivable value is decreased by 3,000. Current asset decrease. So what is the rule? The rule is we have to add back that amount to the profit. That is why you can see under the solution side, decreasing current asset, that is 3,000 we are added. Okay. Next one, debtors. Debtors is again it is a current asset, and what happened with the value? The value is increased, correct? No, because in 2013 the value was 10,000 and in the 2014 the value is increased to 12,500, which means it is increased by 2,500. So what will happen if the current asset increases? We have to minus. That's why I written under less. Third item is a bills payable. Bills payable is a current liability. What happened with the value? The value is increased because it was 20,000. Now it is 25,000. Correct. So it is increased by 5,000. So what is the rule for current liability? If the value of current liability is increased, means we have to add back. That is why we added 5,000. Okay. The next item is creditors. Again, the creditor is a current liability. Correct? No? Yes. What happened with the value? Value was 8,000. Now it is 6,000, which means it is reduced by 2,000. Current liability decreased. So what you have to do? We have to deduct. Correct? No? That is why under deduction we deducted 2,000 rupees. Next one, outstanding expenses. Outstanding expenses is a current liability. Correct? No? So what happened with the value? The value is increased by 200. Correct? So that is the reason outstanding expenses 200 rupees we have to add back. Okay. The next one, accrued income. Accrued income is nothing but outstanding income. Okay. So it is a current asset. So what happened with the value? The value is increased because it was 600. Now the value is increased to 750. Which means it is increased by 150. So the current asset increase means we have to deduct. And the last item, income received in advance. Okay. So income received in advance is a current liability because it is not our money. Okay. It is a others' money. That is the reason it is a current liability. So what happened with the current liability? The value of current liability is decreased. Decreased by 550. Why? Because it was 800 and now it is decreased to 250. Correct. Which means the 550 value is reduced. So the current liability reduced means what is the treatment? We have to deduct. So all the items we are covered right now. So under add we are added decreasing current asset, for example bills receivable. Then also we added prepaid expenses. Increasing current liability, two items is there. One is a bills payable, another one is a outstanding expense. If you add together, we will be getting 8,300. Correct. For 70,000, if you add 8,300, the total we will get 78,300. Come to the deduction. We have first one, increasing debtors, as well as we have increase in accrued income, as well as two item, decreasing creditors, as well as decreasing income received in advance. Okay. All these items if you add together, you will be getting 5,200. What is the total? Previous total, it was 78,300. Now it is reduced by 5,200. That is the reason 73,100 is the cash from operating activity. Okay. This is a basic problems connected with the cash flow statement. Hope you clear with the problem. Thank you so much. We will meet in the next video.